This summary covers ARM's second quarter fiscal year 2025 earnings call, ending September 30th, 2024, focusing on key financial metrics, management commentary, and outlook. Financial highlights: total revenue, $844 million, exceeding the high end of the guidance range. Royalty revenue, $514 million, up 23% year-over-year, matching their highest royalty revenue quarter to date. This growth is primarily driven by increasing adoption of ARM9 architecture and the initial deployment of its compute subsystems (CSS). Licensing revenue, $330 million, down 15% year-over-year, but better than the guided expectation of a 25% decline. Management noted that licensing revenue can fluctuate due to the timing and size of large deals. Annualized contract value, ACV, up 13% year-over-year, reflecting underlying license growth. Remaining performance obligations, RPO, increased 10% sequentially due to a strong bookings quarter. Key drivers and business performance: ARM9 adoption. Version 9 now represents 25% of royalty revenue, up from 10% a year ago. This is a significant driver of increased value per chip. Smartphone performance. Royalty revenue from smartphones grew 40% year-over-year, significantly outpacing the 4% unit growth. This is attributed to a higher proportion of ARM9-based chips and the introduction of CSS. Examples include Apple's iPhone 16 and MediaTek's Dimensity 9400 using ARM's v9 CSS. Data center and automotive momentum. ARM is seeing significant traction in data centers with general availability of Microsoft Azure Cobalt and Google GCP Axion, both ARM9-based. NVIDIA's Grace Blackwell, integrating ARM CPUs, has also begun shipments. The automotive market shows a strong pipeline for CSS in ADAS and IVI applications. Ecosystem strength. ARM highlights its vast software ecosystem, with over 20 million developers, and strategic integrations like ARM tools and GitHub Copilot. Industrial weakness. Growth in royalty revenue is partially offset by continued weakness in the industrial sector due to ongoing inventory corrections. Management forecasts and outlook. Third quarter FY25 guidance. Revenue, $920 million to $970 million, 15% year-over-year growth at the midpoint. Non-GAAP operating expense, approximately $525 million. Non-GAAP EPS, 32 cents to 36 cents. Full year FY25 guidance. Reiterated revenue, $3.8 billion to $4.1 billion, 18% to 27% year-over-year increase. Royalty revenue growth, high teens. Non-GAAP operating expenses, approximately $2.05 billion, 19% year-over-year increase. Non-GAAP EPS, $1.45 to $1.65. Future trends. Smartphones. Continued growth driven by ARM9 adoption and CSS ramping. Cloud and automotive. Expect to continue gaining share. Networking. Sequential growth expected in Q3 and Q4. IT. Recovery not expected until next year. PCs. Optimistic about growth in the next few years, with a long-term goal of 50% market share. Significant risk factors. Qualcomm litigation. Management addressed ongoing litigation with Qualcomm regarding the cancellation of an architectural license. They stated that consent for assignment is fundamental to their agreements, and that their guidance has historically factored in the possibility of not prevailing in such cases. They clarified that they have sent a notification of cancellation, but have not yet canceled the license. Financially, they stated no changes to revenue recognition or operating expenses are expected at this time. Macroeconomic conditions. While specific areas like AI and cloud are strong, weakness in industrial segments due to inventory corrections was noted. CEO commentary, Rene Haas' strong execution exceeded expectations on growth strategies in the past year since their IPO. AI demand, the AI everywhere trend is significantly increasing demand for ARM's compute platform. Value per chip, royalty revenue growth is driven by more value per chip, with ARM9 and CSS being key contributors. Ecosystem advantage, ARM's strength lies in its unparalleled software ecosystem and a vast developer community. Future outlook, the future is very bright, with AI expected to run on ARM across all segments. CFO commentary, Jason Child Q2 performance met or exceeded expectations across key financial metrics. Royalty drivers highlighted the outperformance of smartphone royalties due to ARM9 and CSS, while acknowledging headwinds in industrial. Licensing nuances emphasized looking at ACV for underlying license growth and noted that while RPO is healthy, significant deal timing can impact quarterly revenue recognition. Guidance confidence reiterated full-year guidance, citing strong customer demand and visibility. Key takeaways for reading aloud, ARM delivered a strong Q2 FY25, exceeding revenue expectations, with significant royalty growth driven by ARM9 and CSS. The company is well-positioned to benefit from the AI revolution, with its compute platform scaling from the edge to the cloud. While specific sectors, like industrial face challenges, overall demand across key markets, like smartphones, data centers, and automotive remains robust. ARM is actively managing its legal matters with Qualcomm, with guidance already accounting for potential outcomes. The company maintains a positive outlook, expecting continued growth driven by technological advancements and broad market adoption.